It's almost scary that it is happening again. It seems programmed. 3 years of boring bear market, and then 1 year of FOMO and face melting a bull action, and it's like that in all the past cycles. So if history is any guide, we're going to see that again. And if history is any guide, the returns of Bitcoin are not normally distributed. So it's not like we get an all-time high and then a bear market and then an all-time high and then some middle ground. No, it's all-time high after all-time high after all-time high. With all the action we see on the MicroStrategy, treasury kind of things, and with Trump and National Reserve talks, big investors, ETFs. Yeah, to be honest, I would be surprised if we're not ending somewhere near 251 million.
Bitcoin is predicted to break one all-time high after another, eventually reaching $1 million during this cycle. This bold forecast comes from Plan B, the renowned Bitcoin analyst who developed the stock-to-flow model. While Bitcoin's price movements are often considered unpredictable, Plan B identifies a distinct and recurring pattern in the market. He explains that Bitcoin typically experiences 3 years of relatively stable price action, followed by one explosive year of significant gains. This pattern has held true throughout Bitcoin's history, and all indications suggest it's poised to repeat. Plan B projects that Bitcoin's price could rise to between $250,000 and $1 million, driven by historical trends, increasing adoption, and growing institutional support. Stay tuned until the end of the video as Plan B unveils more astonishing insights about this remarkable prediction.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Last time we spoke, we already said, well, this is a bear market. For sure there will be a bull market again. Maybe, or probably there will be ranges like 100K, 1 million. That's a wide range, obviously, but I still think that range is, we can narrow it down a little bit. I've done that before on Twitter. So I'm thinking 250, 1 million is where I expect it to be on average, right? That's not the all-time high or anything. That's the next level that Bitcoin will rotate to with all the action we see on the MicroStrategy, treasury kind of things, and with Trump and National Reserve talks. Big investors, ETFs. Yeah, to be honest, I would be surprised if we're not ending somewhere near 251 million. If we really go to, say, 500K Bitcoin, that would be a 10 trillion market cap, up from today's 2 trillion market cap. So that needs some capital, some flowing from either real estate or stocks or bonds or gold towards Bitcoin. And yeah, I think that's what we're seeing right now. That actually Bitcoin should be in a well-balanced portfolio. It has a place in a well-balanced institutional portfolio. That was unheard of a couple of years ago. Right now, it's I mean, the BlackRocks and the Fidelities are talking about it like it's always has been like that, and it's logical. So no, I think those events play into the enormous jump in price level that we all expect. And it's I mean, in that case, and I'm thinking about my third article that I once wrote about the stock-to-flow X model, which is of course a very broad model, but it was comparing Bitcoin with gold and real estate, and it was talking about stages, like or phases actually. So the beginning, Bitcoin was just a proof of concept, a nerd toy. Then it went to a transactional thing. It broke $1 for 1 Bitcoin. It was wow, this thing has some worth. We can use it for paying cups of coffee. And then we got the idea of digital gold, and now we're entering a phase where it's an institutional asset, a real institutional asset, where BlackRock, Fidelity, and even national states are thinking about investing in it. So no, it's really a next chapter, and Yeah, a new price level, a higher price level, goes with that next chapter. I'm surprised too. It's always very surprising that it's 3 years of nothing and worries and exchanges failing and all kinds of risks, and then all in a sudden everything happens at the same time. It has always been like that. 2013, 2017, 2021, and now probably, well, next year will probably even more surprising than this year. Everything tends to be clustered in this very short period of time, and it always comes as a surprise, even if you have lived through 2 or 3 cycles. There's so many angles. We could talk hours about the micro strategy case alone, and a couple of things. He was the first. I congratulated Michael when he just did it. When he did his first purchase, I said, well, congrats with basically having the first ETF on the market, because he has this vehicle, an exchange-traded company that he filled with Bitcoin, which then essentially becomes an exchange-traded fund avant la lettre. So even before it was allowed for real ETFs, he was doing it, and that alone was like a brilliant move. But then the end game, it's funny if you look at the German Weimar period, the beginning of the 1930, 29, that period, when we had hyperinflation in Germany. There were a lot of losers, but there were some winners. And one of the winners was a guy who had a company who actually borrowed money in that worthless paper Deutschmark, and then bought gold with it, the gold bars and the gold marks. So and essentially Michael Saylor is doing the same thing. It's really, really interesting what he's doing. And also what he explained time and time again is, I will never sell my Bitcoin. And I understand that, because especially in a capital gains tax environment, you would rather borrow against the Bitcoin and then wait until Bitcoin goes up, and then roll over that debt with a bigger debt. So you just pay it off and have a bigger debt. And so you indeed never sell the Bitcoin. And that's very interesting thought for also personally people, if they need money. Like, well, take me, for example. I'm all in Bitcoin since, for a long time. And so I have to sell to eat. But I can also borrow against the Bitcoin and eat from the loan, which is wiser, I think, than selling the Bitcoin, because the Bitcoin will catch up, and you just repay the loan with a new loan. So that's very interesting. And another thing, I find it really interesting as an institutional investor, because there is all kinds of arbitrage going on as we speak between the crypto world, the Bitcoin world, and the fiat world. So, and essentially, Michael Saylor is playing this arbitrage superbly, but you can do it yourself as well, right? I mean, if you look at the futures market now, it's not as wild as 2021. For sure it will be, but right now, if you just buy a Bitcoin for, say, what is it, 95,000 or something, 1,000 euros or dollars, you can sell that Bitcoin in the futures market for 1 year later, just for delivery 1 year later, for 105. So that's a $10,000 risk-free, quote unquote, profit, which is a little more than 10%. So, of course, you run the exchange rate risk on the exchanges that they go bust. So you should do it with a CME or something. But if you can borrow money for less than 10%, and Michael Saylor is borrowing money for 0%, then it's just free money. It should not exist in a efficient market world. So no, I understand Michael Saylor, and everybody can do the same thing.
Cryptocurrency adoption is surging, with over 400 million wallets now holding balances, as highlighted in a recent Chainalysis report. This milestone coincides with the latest bull market, attracting both everyday users and major institutions. Policymakers are taking notice too. U.S. Federal Reserve Governor Christopher Waller has praised stablecoins for their ability to reduce cross-border transaction costs. With expanding use cases and growing institutional interest, both crypto and stablecoins are positioned for significant growth. Now, let's dive back into Plan B's thrilling predictions for the future.
The wealth distribution problem in the world is not going to be solved by Bitcoin. So there will be, it will be Pareto distributed wealth, and so a couple of people will own most of the wealth, and most people own the rest, which is a small part of the wealth. And within Bitcoin, that will be the same. So, for example, well, of the 20 million Bitcoins out there, 1 million, of course, is Satoshi. That's probably gone forever. But then there's the Winklevoss brothers, early OGs. They also have 1 million Bitcoins, right? And
Crazy.
so, yeah, and then you have Michael Saylor now. What does he have with a MicroStrategy? Like 400,000
or so probably at this point. Yeah.
Yeah, and then there's a couple more OGs that have 100K or more.
Yeah.
Yeah, that's in every aspect of the economy, and that will not change with Bitcoin. It will not be evenly distributed. And for example, the ETFs, it looks like BlackRock and Fidelity, the really big capital managers of the world, the money managers, that they have that money and they control it because it's in their ETF. But of course, they own it for the clients. The most exciting news from last couple of weeks I found was Allianz insurance company, a German insurance company that had 25% of the MicroStrategy bonds, the Bitcoin bonds, on their balance sheet. Now that is real money. That is really Allianz's money, Allianz's balance sheet. They have to, they run the risk on those bonds, which is low, of course. But that's a first big insurance company that puts a toe in the water and puts a Bitcoin-related exposure on the balance sheet. That's real money on a real institutional balance sheet. To be honest, if I were the CFO of Microsoft, I would probably vote against having a Bitcoin reserve, unless you're very much into Bitcoin and believe in Bitcoin and are specialized in Bitcoin, like Saylor and MicroStrategy is right now. But if you're not like that, and MicroStrategy or Microsoft really needs some convincing now, it seems. So if you're not into Bitcoin, then financial literature stipulates that you just return the money to the investors as dividend or buyback, and I'm not going to play hedge fund or bank as a basically software company. I think we're going into a very interesting period, a very interesting next year, 5 years, 10 years, where indeed all those things will be offered by normal banks or new banks, maybe MicroStrategy kind of banks. And then even further down the road, there is this end game maybe that the dollar is irrelevant. You will never change anything for dollars. And I don't know how that world would look like, but what's the purpose of exchanging it in dollars, selling it for dollars, or borrowing dollars against the Bitcoin? It's just because in the economy, the US dollar is accepted and not Bitcoin. But what if Bitcoin is accepted? What if if El Salvador, with its legal tender, Bitcoin as legal tender, gets more support and more follow-up by, well, let's say a Middle East country?
We're entering a fascinating era for money and banking. In the coming years, traditional banks might start offering Bitcoin-based services, or we could see the rise of smaller, cryptocurrency-focused banks. Plan B envisions a future where the US dollar loses its dominance, potentially being replaced by Bitcoin. He highlights El Salvador, which has already adopted Bitcoin as legal tender, and speculates that other countries, perhaps even in the Middle East, might follow suit. If this trend continues, it could bring tremendous benefits to Bitcoin and its value. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.